Hi, this is Keith Schneider, CEO of MarketGauge.com, and it's September 11th, 2022 edition of Market Outlook. So, interesting week. We got a bounce off of some pretty extreme oversold levels, at least on a short-term basis. Let's take a look at where we are. So, first of all, if you take a look at the Dow, it's actually the weakest out of the bunch, just closing pretty much right at the 50-day moving average. Now the Qs were very, very strong this week and actually regained its 50-day moving average as well. So SPY, IWM, and the Qs all above its 50-day moving average, moving into what we would call a strong recovery phase because the slope on all of the 50-day moving averages is positive. So definite positive development here. Just how long this lasts remains the question. The other thing to note is that the real motion indicators on the four major U.S. indices are about to move into a positive phase here. You can see the 50 period of real motion about to cross the 200 in IWM. And so that's definitely a positive sign in terms of momentum that the IWM, Grandpa Russell, is definitely showing some signs of strength. And in fact, our small cap models this week is up over 11%. So that was the first real strong week we've had really since the beginning of the year. Now, the other thing to note, and this is why I'm a bit more negative longer term, is take a look at IWM with our real motion charts on a weekly basis. So you can see we're about to flip where the 50 period of real motion under the 200. We've already done that over the last week or two in the Dow. We're about to do that in the S&P, and the Qs have already done it. So I always defer to the longer term charts in terms of the overall trend. So right now, with this rally, the longer term weekly charts are definitely looking more suspect. So that's why, even though we've got this nice spurt on the dailies, the weaker charts are on the weekly charts. So hence, definitely deferring to those and looking at a more defensive posture in the markets. So another interesting relationship is that of the S&P versus utilities. Obviously, utilities definitely a risk-off type of play. One thing you can certainly see here in terms of our triple play and our overall momentum here is you can see the S&P failing against XLU, definitely risk-off. In fact, XLU is actually positive on the year, and that is diverging from most other sectors. So the risk-off sector getting attention, getting some love, and that is definitely a thing of caution to keep in the back of your mind as well. Okay, now moving on to volume analysis. What's interesting, despite the rally over the last couple days and a good positive close for the week, you can see 5-day price change up between 1.65% to 3.25% with the Russell. However, another thing of caution is if you look at the number of accumulation days, they're less than the distribution days. So volume patterns not confirming this recent pop over the last couple of days, making it a bit more suspect. So now with Friday's action, if we look at sector rotation and performance, one thing that's positive is, of course, for the week, all major sectors up. Also, same thing with Friday's action. And the other takeaway is you can see consumer staples up 1% on Friday, only up 0.6% for the week. And so that's definitely underperforming the overall index. And that is definitely a positive thing, because the more speculative areas like consumer discretionary spending, that was up over 4 or almost 5% on the week. So spec sectors doing better than more conservative risk-off type plays. So there you have it. The other thing to note, of course, is that energy inflationary pressures are still there as well. And you can see XLB materials up 4.9% for the week. So that was very, very strong recovery here in a inflationary type scenario. So yes, materials definitely looking strong and doing better. The other thing to note is you can see we did have a good improvement in phases. So healthcare, real estate, home builders, and retail in general all had improved phases, moved back into recovery from bearish. Okay, now moving on to more of the global macro picture of market hotspots, I'm just going to focus on what did well. And what's interesting is you can see for the week, right, with this rally, that gold miners were up over 8%. The other thing is metal and metal mining also up very, very strong. And oil services also leading the rally this week. So one thing you can certainly see here is raw materials from energy to metal and metal mining all up leading the rally, which means inflationary pressures are still very much in play. All right, so hope this all helps. As you can see, longer term is still very, very strong concerns. We still have inflationary pressures. Market was up strong this week, but the leading sectors here and areas of the market were oil and gold and metals. So no question, inflationary pressures still there. Although if you look at the mainstream press, they're all saying, oh, commodity prices are way off their highs and that whole cycle is potentially finished. I don't think so. The data here is showing something else in our opinion. All right, hope this all helps. See you next week, and bye for now.